Hello everyone. So today we are going to be discussing an interesting topic. Actually, it's a topic I don't normally talk about. So the webinar is going to be a little bit different. We're talking about the advantages and disadvantages, and most importantly, pitfalls of technical analysis, right? Which is an interesting thing to talk about for me because obviously my business Autochartist is involved in technical analysis, but many people think that it's misunderstand how to use it, right, and don't really understand the pitfalls. And it's very, very important to keep those in mind when using technical analysis. It's a very important topic. But before we get going, I've got to just quickly make all the lawyers happy and display this risk disclaimer, right? I'm not going to read it to you exactly, but essentially it says that, trade safely, trade with money you're prepared to lose, okay? And it is trading FX or OTC instruments is high risk. And I'll leave it at that, and then we'll move on with the webinar. So now you can all see my MetaTrader, I hope. So where should I start? I think the when we look back 30 years, there was a situation where people didn't have these amazing tools like MetaTrader or other trading platforms that drew all these charts for you. People used to sit with a graph paper and actually draw graphs, and so it was a lot of the analysis was done visually, and it wasn't as simple as it is today to simply add moving averages, RSI, stochastics, because to actually you had to draw something on a piece of graph paper. You had to sit with your calculator working out the numbers, right, and actually drawing it on your graph paper. But these days, you want to add a moving average, just go insert an indicator, a trend indicator, moving average, and you choose your number, and bam, there you've got an indicator on your chart, right, like a moving average. And then if you don't like the way it looks, you just change the numbers. And this this simplicity really is great, right? It's great. You can just add things onto your chart, but it's also made us less thoughtful about what it means to add something, right? When something is too easy, you just kind of take it for granted and just add it to the graphs, but you're not really forced to think about it, because if you make a mistake, there isn't this problem of having to erase manually and recalculate numbers, right? So we become a bit, I guess, blasé about what things we add to our charts, right? So we can add a chart, like we can add a moving average, we can add let's say an RSI, a relative strength indicator, and we look at these things, but we don't really understand. Many of us don't really understand what they mean, and we're not talking specifically about the what each indicator means. That's not a lesson for today. But there are certain things that we do need to think about when using technical analysis. Not only the technical analysis that I'm showing you now in terms of the RSIs and moving averages, but also in terms of Autochartist itself, right? The technical chart patterns themselves. Okay, so what does it mean to have an inverse head and shoulders? How should it be used, and how shouldn't it be used? Right. So these are also very, very important topics. And how, which indicators do you use with each of these? Can you use a moving average and an RSI together, or can you use a chart pattern like an inverse head and shoulders and a RSI together, right? These are all questions that you need to understand, and this is what we're focusing on today. So lots of different options, and the tools make it really easy, but it also makes it really easy to misuse and abuse and actually get really an answer that you're not looking for. So before I dive into the more complex side of technical analysis, the using Autochartist, I want to show you the first pitfall of TA, and that is that you can get pretty much any uh, any answer that you want, right? You can add in this moving average of period 14, and it looks like the chart is moving up, right? If I change this to 200, okay, the graph looks completely different, right? And this is the one immediate pitfall of TA, is that, or this kind of technical analysis with indicators, is that you can really choose, you can get the answer you want. So if someone says to me, oh, the RSI is over close to 70, that means it's now a selling opportunity, right? Well, I can argue that. I can say, well, it's only above 70 because your period is 14. If I change the period to 50, then the RSI is doing nothing, right? So which answer is correct? Is it a sell opportunity or is it do nothing, right? And and this is the first pitfall. Now, many beginner traders use one rule for all the indicators. So, for example, people love, I don't know why, a 200 and a 120 moving average, seeing when they cross over. But really, these numbers are absolutely meaningless when you start looking at different instruments. What you First thing you need to do when you're selecting the period of your technical indicators is look to see whether they make sense visually. So when I make my moving average 50 candles, right, like I did and now in this example, I need to look at it and say, is this um, modeling the kind of price movements that I want to be trading, right? So I'm looking at a 4-hour chart here, right? Um, and uh, and I want to, for example, trade these kind of opportunities, right? So from this line to this line, so this is kind of like 66.76 to 65. So what's that? 100, 200 pip movements, right? But this moving average period that I've drawn on here, 50, doesn't seem to have any turning points on those kind of size movements. So clearly, I need to make my moving average smaller. Okay, my period smaller. So now it's starting to mimic my price graph, right? Which is better, in the right direction. Let's see how low I have to go for it to really mimic it. Aha, look at that. So 10, I'm starting to get the kind of movement that I want, right? I'm starting to get turning points around the kind of movements that I want to see, but a little bit too much noise. So maybe I'll make it something like 15. Okay, so it looks like a 15 bar moving average on NZD USD 14 gives me the kind of movement that I'm looking for on this price graph. If I've changed that to, let's say, 15, now on 15, I don't think that a 15 candle, if I change it to a 15-minute graph, I don't think that it really gives me the kind of information I need, because look at all this noise that I'm getting in the middle of my screen, right? It's too sensitive. So on a 15-minute chart, I might want to use something completely different. I might want to use something like a 30, right? Which looks a lot better. Now I'm identifying much bigger movements. Even 30 is maybe not enough because I can see I'm still getting noise here, right? So you can see how it's really important to use moving average periods that are in line with your trading style, right? Let me just silence my cell phone. It keeps on going off. Sorry, everybody. Okay. So it's the same thing with any technical indicator. If I'm looking at the RSI, I'm currently on 50, right? I can change that to, let's try as well, 15 and see what that looks like. So is 15 giving us what we want? Let's have a quick look. What we want to see is we want to see real peaks and troughs at where the lines are crossing. So let's see where it touches the sell lines. Are we really getting peaks? Right. I mean, this looks pretty promising, right? So 15, maybe a little bit too sensitive, right? Maybe a little bit too sensitive in terms of 15. Let's maybe try something a little bit higher than that. Let's try 20. Let's see what that looks like. 20, yeah, we're starting to look a little bit better, right? So now you can see that the peaks in the RSI correlate very much to some of the peaks in the price graph, right? So this is quite an interesting one. And notice how um, uh, uh, I, you shouldn't be scared of using two different uh, periods for two different TA types because they're saying different things. A moving average is what they call a trending indicator, right? It's trying to find the trend, whereas a RSI is an overbought, oversold indicator, right? It's an oscillator. It's telling you if something has moved too much or moved too much in either direction. You know? And this is yet another decision that you need to make about yourself as an individual, as yourself as a trader. You need to really think, are you a trend trader or are you a mean reversion trader, right? So that means what I'm trying to say is, do you want to buy and sell these kind of movements, buy and sell? Is those the kind of movements that you want to be trading? These little short up and down movements, or are you the kind of trader that wants to be focusing on trading these kind of long-term trends, right? These are two very, very different styles of trading, right? And I know it's tempting to say that you want to do both, but I can tell you from experience, if you want to try to be both a mean reversion and a trend trader, you're potentially setting yourself up for failure. And certainly in the initial kind of a few months or even years of trading, you might want to consider only choosing one type of strategy, right? Either mean reversion or trend. Now, if you're playing mean reversion trading, you should probably not be trading the 1 minute or the 5 minute charts because the movements are really, really small and it's sometimes difficult to capture profits. But on the kind of 30-minute, 1 hour charts, it's easier for retail traders to be mean reversion traders. And I'm only saying that because many retail traders cannot spend the entire day watching their graph go up and down, right? They can't keep an eye on every single tick that comes through. And so most retail traders, if you're playing mean reversion, you want to play the largest swings, kind of 20, 30, 40 pip swings in the market, right? So that's very, very important for you to decide on. Now I'm going to remove some of these lines. Let me just remove some of these drawing indicators. Okay. Now let's look at something like technical chart patterns and support and resistance. Now, support and resistance uh, is I think widely acknowledged to be the most broadly or widely used methodology of trading technical analysis, right? So we can see that there is an inverse head and shoulders happening here on the Kiwi 4-hourly chart. All right, let's see what's happening on a larger scale. There's a triangle that points up, right? On the Japanese yen, looks like, there's a breach through the support line, right? I'm sure you agree with that, a breach to the support line. And so one of the most common questions I get is, Ilan, what other indicators should I use along with chart patterns, right? Because most people use chart patterns, right? So what indicators should I use along with chart patterns? Let me give you some hints and tips. Let me zoom into this bit here. If you are a trend trader and you're using chart patterns, then you are looking for breakouts. You can see that in Autochartist, a breakout is signaled by a colored icon. Emerging patterns are signaled by a gray icon, right? So this is a breakout chart pattern. You can see how the price has actually broken through this resistance level, and Autochartist gives you a target up to this gray area over here. So for some of you that maybe are looking at this chart over here, you're looking at the RSI and you're thinking, okay, this RSI is close to 70, so I should be selling. But wait, the head and shoulders is telling me to be buying, right? It's telling me it's going up to that price level over here. So how do I combine the two together? And the truth is that if you're a trend trader trading breakouts, you should not be looking at an RSI, because an RSI is a mean reversion indicator. It's telling you the price has moved too much. It's time that it's going to start pulling back. If you believe that the Kiwi is now starting a trend going up against the US dollar, then you should be looking at a trending indicator, such as a moving average. So I'm looking at this moving average here, and you can see it's kind of moving sideways with a little bit of an upward trend. So the question is, should I buy it now? The answer is, to me, it looks very interesting. I might want to give it maybe another 20 or 30 minutes to see if the price continues and my breakout confirmed. Then I would trade this long, right? So using an RSI in this situation would actually be incorrect. All right. But now let's look at some emerging chart patterns. I'm going to remove everything else. Okay, here is a triangle on gold. Now, I've got a triangle on gold, and the question is, should I be trading this long or should I be trading it short, right? You can see that there's been no breakout. There's no breakout through support or resistance. The moving average is moving sideways, which we expect because there's no trend, there's no breakout right now. Should we be trading it? Now, for this situation, we should be looking at the RSI. If the RSI was very low, then I would say to you, yes, we should be going long. If the RSI was very high, I would say, yes, we should be going short, because there's no breakout. So we're actually trading converse to the trend. Let's look at this. Opportunity here on USD CAD. Now, this I find really, really interesting. Why do I find it interesting? Because I can see I have just come off a resistance line where the RSI was very close to 70. It was, I mean, if I change the period of the RSI, I can probably get it to 70. So let's make it, I don't know, 12. Okay, there it is. So the RSI actually hit a sell signal, right, at 70, and the prices started coming down. So now I'm saying, yes, this is probably an interesting trade to trade short down to the support level, or at least down to 125.98. And notice how I'm completely ignoring the moving average. The moving average is irrelevant for me. Why? Because I am now trading mean reversion, right? I'm trading the swings in the market. I'm not trading the trend. I hope everybody's with me. I'm not seeing any questions coming through. I thought I'd see some questions, but now keep the questions coming, guys. Let me show you one or two other examples which maybe get a little bit more complex. Breakout. Here, this is what I want to see. Here, silver is approaching a resistance line. So you can see that green resistance line, which it identified over the past. And you can see, yeah, it's pretty good resistance line. Maybe it's up here, maybe it's over here. It's kind of arguable where it is. But certainly the price, you can see this, I'm looking at my additional indicators. The price was at a very low level here by the RSI, right? It started turning around, and now the moving average is actually pointing up. So again, is it going up towards this sell position? You can see that previously the same RSI came very close to sell levels when it hit that line, right? So now you have a choice. Now you have a choice to make. There's a number of different ways you can trade this. I'm going to see if this tool has the ability for me to draw lines. Give me one moment. I can't actually draw on my screen on this tool, so it's a little bit limited. So what I could do, you know what I'm going to do actually? I'm going to copy and paste this into a little screen grabber, and then we can talk about it. Give me a moment. Let me move this away. Let me capture a screen grabber here, and then I can draw some nice pictures for you. So check this out. One way to trade this is to go long at the current spot price with a take profit over here. The other way to trade this is to set a sell limit, set a sell limit at this level going short. And the last way to trade it, if you're a trend trader, is to wait for a breakout and set a buy stop to go long, right? So there's a few different ways you can actually trade this. And let's look at how we can combine some of the other technical analysis indicators to make a decision. So if I'm a trend trader and I want to set a buy stop order up at this green level, right? So if the price hits the green level, go long. What I should be thinking is, if the price goes up to that level, is the moving average going to be pointing upwards? And the answer is, it absolutely will, right? You can just imagine the extension of this red line, right, going upwards, right? That would be a good thing to trade. If you're a mean reversion trader, you're thinking the opposite. If it hits this level, forget the moving average. I'm going to ignore the moving average. Will the RSI be high? And the answer is yes. We can see the RSI would have been high based on these previous high levels over here, right? In which case, you would say, actually, I should be setting a sell limit order to go short when it hits this green line, right? Okay. Okay. So I hope I've given you some ideas of how to trade this stuff. Now, in Autochartist, there's another opportunity called big movements, which I find really interesting, and I'll try find an opportunity now on big movements. I'm not sure why I'm not seeing any big movements right now. Maybe we'll see some on M15 and M30. Let's quickly have a look. Aha, there we go. So on XAG, okay. So on silver, there was a consecutive candles. I want to see if there's a big move. Sorry, everyone. Just give me a sec to look through the stuff right now. Oh, no exceptionally large movements. So this is another interesting one that I see on that Autochartist identifies for you, and that is something called consecutive candles. There's another one called large movement, which I don't see an example of right now, but it's essentially the same thing. Autochartist tells you that there have been an exceptional amount of uh, candles in the same direction, right? So for those of you that are mean reversion traders, in this situation, silver is in the 98th percentile of its bullish candles, consecutive bullish candles. That means that 4 bullish candles on silver is an exceptional case. It only happens once or twice every 100 or so movements, okay? So for those of you that are mean reversion traders, should be looking at this and saying, this is a possibility to trade, right? Now, I have set my RSI to be 12, but I'm looking at 4 candles of bullish movements. Maybe I should reduce that, right? If I reduce that, I can see that my RSI does actually correspond with a large bullish movement, right? And so potentially this is a sell opportunity if you're a mean reversion trader, okay? Um, I see there's a question on about what is this indicator. Okay, so just to go back a step, I thought we all knew what Autochartist was. Maybe we don't know what Autochartist is. So Autochartist is a free tool that you get from Axiori. If you go to the website, you can actually download this tool and install it. And when you install it, you get this expert advisor here called Autochartist. And when you drag and drop it onto your chart, don't worry, it doesn't trade for you. It identifies all the technical analysis opportunities that are happening in the market, right? Um, uh, this tool is free of charge for you, right? You just need to have a live funded account at Axiori. So no one's trying to sell you anything, and I'm not certainly not trying to sell you anything. Axiori pays for the tool on your behalf, right? So um, uh, don't worry, I'm not trying to sell you anything, right? So you can see that it's identified this inverse head and shoulders, this support level on US dollar, this consecutive candles on silver that I showed you a few minutes ago. It's got all these trading opportunities, that it identifies for you, which you can, look at and decide what you want to do with them. I really like the trading opportunities that have to do with horizontal levels. So we missed that one. This is on USD/JPY 15-minute chart. So we definitely missed that one a while back. Looks like that was a pretty good call. We missed it. I'm going to remove the M15 and M30 results so that I get less noise. Um, let's see what's happening on the Australian dollar right now. Wow, massive move towards this resistance level at 0.7783. That looks like a potential move up or a sell limit from 77.83. Very, very interesting opportunity over here. So I hope that that's my 30 that's my 30-minute allocation. Let me see if any questions have come up. Okay, so I have a question from. Let me move the screen. It's a little bit small for me. I'm just going to move it to my other monitor. Excuse me while I look away from all of you. Okay, so I have a question here. Interesting class, Mr. Ilan. Thank you. My question is for a trader who intends to cash in on a long-term trend. How do you identify such to take advantage? Okay, if you're a trend trader, right? Firstly, with regards to Autochartist, you got to look at what I call breakout patterns, right? Which means breakout chart patterns or breakout key levels. Let's see what that kind of thing looks like, right? So back to this inverse head and shoulders. Now, inverse head and shoulders is one of the most powerful trading opportunities that there are, right? And so in this situation, it's telling us that the price is potentially starting to trend upwards. So the first thing you need to know is, okay, there's a potential to trend up, right? Now, whether you think this is true or not is a question, right? For me, I look at this and I say, well, the previous high within the visible range is over here at 0.73, right? Is this enough of a trend for you? In FX terms, this is a very, very big move. This is a few hundred pips. So for me, I would say, yes, this is a trend which you can take advantage of, right? So this is opportunity that I would definitely have a look at. Let's look at this channel down. Okay, we missed it by a few hours. We missed it by 1 to 3 hours. You can see there's a strong trend down and a change in the trend, right? So this is a great, great pattern. What I'm seeing here is a very bullish trend, consolidation down, and another strong breakout. Again, very strong potential trend upwards. So you always need a starting point to try identify the trend, right? And so I use support and resistance and chart patterns. You could use something else, right? You could use a moving average if you wanted to. But really, again, the trick is from a moving average perspective, which is the interval that identifies big trends for you. In this situation, I can see, what is this moving average here? 15. Are the turning points enough of a trend for you? I can see some noise. Maybe they're not trending enough for you, right? Maybe you want to be more sure. Maybe you want to set this to 25. Is that the kind of trend that you want to identify? If that is, then simply set your moving average to 25 and find a turning point and trade that as your trend, right? That's your maybe your initial signal as a trend. And you can see here in this situation that the turning point has been a turning point on the 25-day moving average. If you like what the 25-day moving average has done for you in the past, then go ahead and trade that trend, right? This is a start of a new bullish trend for you, confirmed by a breakout through a downward channel. John is asking, is MT5 available for the other trading platforms? Absolutely, it is. MT5 and CTrader. Yes, John, it is. There is another question. It says another question is that trading with a PC shows more detail of the MT4 chart features because I am sensing such from your pictures and screens you are showing. Well, I think all of this is available in all the platforms. The difference is that I'm using this indicator called the Autochartist indicator. MT4 does not come standard with this Autochartist MT4 indicator. You need to download this from the Axiori website. Let me quickly try and find that address for you, and then I will send it to you over the chat. Okay, so here it is. I'm going to show you the screen. If you're on the Axiori website and you click on trading platforms and tools, there is an Autochartist. There's a tool and a how to install, right? If you click on the how to install, it actually gives you all the installation instructions and a download link. So I invite you to do that. Again, you don't have to pay for it. If you have a live funded account, you don't have to pay for it. Just so that you know. Okay, back to my questions. Give me a moment. Let me open up the questions window again. Okay, so let me get you, so other people are asking for the link to download it. Let me get you that link. Okay, I think I have sent a public message now with the link. Please let me know if you can see that question. Okay, cool. Now, all right, I'll finish off with one last thing. I see, is it Indu? is asking me for my view on gold. I don't like to give my view because my view changes every few minutes. Indu, but let's see what we can see. The way I'm looking at this is I always like to look at a very long term and the short term. So in the long term, I can see, I'm sure like everyone else can see very quickly, I'm seeing a lot of resistance at that level, at the $2,000 level. Of course, you don't have to be a great trader to see that. I also see a very strong resistance at 1960 level. And again, the next thing I see is consolidation and resistance at the 1900 level, right? Uh, if I zoom in, right, to those levels, maybe I rethink my 1900 level to 1930, and I'm seeing very strong support at 1770. Let's quickly see. Yeah, that is definitely a very strong resistance and support level. You can see it over here, right? So right now, what I'm starting to notice is a start of an upward trend. Okay, so you may right now the moving averages and the RSIs are saying nothing to you because it's a sideways market. I would guess again, if you let me remove all these lines. I would guess that if you see gold from just purely from a technical analysis perspective, if you see gold breaking 1870, you might see a movement up to 1950. That's my guess. At least, you might want to start taking profits at 1900s, 1910, 1900. That would be kind of my best guess right now, without too much more analysis on that. Those are kind of the longer term plays. I'm not talking about the short term, any short term volatility at the moment. I hope you're happy with my very brief analysis. Okay, Peace is asking me, please, how can one trade multiple time frame confluence using D1, H4, H1, and M15? Okay, I've done a little bit about with that right now. Peace, is there a specific instrument that you want me to have a look at? Um, you know, let me know if there's something specific that you want to have a look at. Like Indu wants to look at gold. Maybe you want to look at something specific. Nothing. Okay, I'm not really getting a response from Peace. Okay, let me see if I can find something on confluence between two different things. Okay, so I see that on USD JPY, I'm actually getting two different things. I'm getting something on H1 and I'm getting something on M15. So on H1, I'm seeing that price has just broken through support and it's going down to, oh, I see Peace says to me GBP USD. Okay, well, I've started on USD JPY. I hope that's okay. Sorry, I didn't see your message there. So the price is now broken through a support line with a target price at this level over here at about 103.40. And on the 15-minute chart, we're seeing breakout as well. Short term, it's almost reached its target region here at 103.50. So in those two situations, you can see how there's two indicators pointing in the same direction, right? And so this is quite interesting. Although I must point out that this RSI, although it's very noisy, is saying buy. But certainly the longer term trend on USD JPY looks like the next kind of major support level is at around 103. 103.50, I would guess. Right, that's what I can see. So definitely the long-term trend right now is short on JPY. Okay, so I'm getting another request from Yoku. I wonder if I just want to talk a little bit more about education instead of giving my view on specific instruments. But I've got Kulrul. Kulrul, I hope that I pronounced your name correctly. Sorry if I did it wrong. He is asking, do you mind teaching us a little bit on retracement and reversal? Okay. Um, uh, uh, Retracement and reversal. Okay, so that is really kind of the same thing for me, but I will show you what I mean by that. So let me close down Autochartist for just a moment. If and I'm actually going to remove excuse me, I'm going to remove the moving average indicator so we can focus on retracement and reversal. So if I look at this graph on the yen, right? um, I'm going to try pick an RSI that kind of given me the right. Yeah, it looks like this RSI isn't too bad. It's kind of giving me sell signals when I wanted to. The buy signals are, yeah, not bad as well. Okay, so this looks good. So an RSI of about 14 period 14 kind of gives me what I want on USD JPY 14. So what it's telling us, and you can see it from some of these previous examples in the past, that when the RSI got to a high level, right above 70, the price really did turn around. Okay, and again over here, the price again did turn around, and so that is what is meant by a reversal. Is that the stock market, as you know, never goes up and down in a straight line. There's always noise. We can see it everywhere we look. So the idea about trading retracements or reversals is to figure out when you believe a price has gone up too much, right? Of course, sometimes you could be wrong. I mean, look at this movement over here from this level, right over here, up to up to this level over here, right? This is a absolutely massive move, and um, and you can see that if you were following the RSI by the book, you would have got here and said sell, and of course you would have hit your stop loss because the price just continued to move up, right? So it doesn't always mean that just because it's gone up too much it's going to come down, but what you have to try to do is try and pick the period of your technical indicator as best you can, that it most of the time uh, gives you what you want compared to your price graph, right? So you'll never be 100% of the time, right? You'll get it right. You need to aim for 55 out of 100 or 6 out of 10, right? 60 out of 100 trades that you want to be correct, right? In fact, professional traders are only looking for 52 or 53% of their trades to be correct, right? Because they know that the trade is the markets are mostly random, right? They're just trying to skew the numbers just a little bit in their favor, right? So in this situation, the RSI has been pretty good lately. What was my RSI period here? I forgot. 14 has been pretty good in identifying these turning points, and so this is again something that you could trade. So right now the price hasn't reached its turning point. If let's say the RSI, if the price continues to move down and hits below the 30 level in the next few candles, then this might be a reversal opportunity for you to trade yen long. Okay. um, uh, okay. Can you, Offlong is asking, can you walk us through on how to use Autochartist? So, uh, Uplang, what I'm going to do is I'm going to leave that to another webinar session. I sent you the link of how to install it. And what I'm going to do is I'm going to send you another link right now, if you just bear with me for one moment, that will get you at least going until we schedule another webinar on this topic. Here is another link that I'm going to share with everyone. I hope you can all see this link. This link has uh, just 3 or 4 very short videos. They are, I don't know, 4 or 5 minutes each. They will at least get you going on how to use Autochartist in MetaTrader. Watch those videos. And then what we'll do is I will ask the staff of Axiori to schedule another webinar, maybe next week or the following week. We can go more in depth into how to use Autochartist. But the basics are very simple. You click on the view button and it shows you the opportunity with the target region, right? That is really what it's supposed to do, right? So it scans all the instruments in your market watch window, and it gives you the technical opportunities based on support, resistance, and chart patterns. It shows you the market opportunities for those instruments, right? And so you can play around with the settings, but that's I think another webinar session altogether. I've gone way over my time. We're on 45 minutes now. I want to thank all of you. I hope you enjoyed this webinar. I hope you learned something new. And if you did learn something new, please let the Axiori staff know. And I really hope that I can come back and teach you some more. Your questions were really, really good. Actually, very good compared to some of the questions that I've seen before on webinars. Very thoughtful, and obviously I can see that many of you have already been trading for quite a while. So thank you for those thoughtful questions. I wish you a pleasant rest of the day or evening. Stay healthy and safe in these crazy times, and I'm sure we'll speak again in the next few weeks. Bye, everyone.